Good morning, Mr. Jimenez. Thank you and welcome to Sincere Solutions presentation on your company, Dufour Williams Commercial Services. So we know that lately you've been faced with a lot of choices regarding what exactly you should do for your upcoming long-term strategy. We know you had some options regarding whether or not you should expand, either through a partnership or maybe a purchase option. And we also know that you also were looking at what you could do internally maybe as an alternate to how exactly you should proceed with your strategy. Today, Sincere Solutions will give you what we think is the most comprehensive look at what we can do to benefit your business. So before we go any further, I'd just like to take a moment to introduce Sincere Solutions. My name is Petra and I'm the CEO, and today I've brought with me my two very esteemed colleagues, Blair and Taylor. Now, without further ado, I want to jump right into it and really get down to what we'll be talking about today. So these are our three key take-home points, the three key things that we will be speaking to you today. First off, we have expansion. We'll review the options surrounding that. Secondly, we'll go into operations and exactly what this means for you. And finally, we will talk about implementation and give you a timeline for how you can implement the strategies we will recommend to you today. So without further ado, I will pass it over to one of my colleagues to get into the finer points of these strategies.
Okay, so before we can really talk about selling fire protection services, you have to understand the consumer, know what the consumer wants. Now, unfortunately, when people go into business, start a new restaurant, they don't think about, ooh, I can't wait to buy fire protection services. That's not what they're thinking. It's kind of a nuisance to them. It's kind of a nuisance that they have to outlay a large amount of capital for these services, for all these things. So let's think about Walmart for a second, what Walmart can offer people as Canadians. Millions of Canadians shop at Walmart because it offers low prices and it offers variety. Now, when we're talking about variety, we're talking about bundling services. We're talking about your ability to bundle all fire protection services together at a lower cost. When you can bundle products, you can actually sell them at a lower cost. And that's really what your consumer is looking for. They're looking for a quality product that's low cost, and they're looking for the least nuisance of product that they can possibly get. So they're looking for something that's really easy to get, and they're also looking for something that's cheap. And by bundling your products, that's what you can do. So when we're talking about bundling services, what this can really do for your bottom line. 71% of your gross revenue comes from your sprinkler installations. So by bundling services, you can actually sell more of that product. You can also sell more of all your products. That's what bundling services really gives you. When you look at TELUS, and they sell internet, and they sell cable, and they sell them in a bundle. They'll sell them in a bundle because it's more cost effective. When someone's going to hook up the one, they can hook up the other. It's more cost effective for themselves, so they can sell it for a cheaper price. And that is what we are proposing as a crux of our solution today for you, and our recommendation is that you bundle your services, expand your market or your product line so you can bundle your services.
Thanks, Taylor. So first, I just want to clear the elephant out of the room. Do you or do you not purchase Shackleton Fire? Well, there's a few things that come to mind. First of all, there's a very expensive showroom that's part of the offering. It's valued approximately $500,000. We feel that this probably will give you very little return on investment in the overall purchase. Secondly, there is a very strong opinion that there's going to be low customer conversion. Now, when you're purchasing this company, that was kind of the whole idea, was to get all of these customers, get to know how to service these customers. And one of the third major reasons was you're already paying really high interest payments. And when we look at your interest payments in compared to your pre-tax income, it's very significant. And we don't really want to add on to that, especially at this time when your operations aren't exactly growing to what you would like them to grow. So with that, we say we like the market, but don't bet the business on it. There's other ways to get into this market. Another option that you suggested was partnership with Shackleton Fire. We feel that may not be optimal. As Taylor mentioned, we would like to integrate these services so you can achieve that cost savings, and to pass on that cost savings to your customer. So where do we focus? If not to purchase, where do you focus? And what we say, first of all, focus on sales. Your sales, that's really where your business is coming from. And it seems like there hasn't been a whole lot of focus on your sales since the acquisition. The two owners have been actively finding new businesses to integrate into the company. We feel that should be expanded. Expand that through hiring an experienced sales associate. What we feel would be a reasonable, attractive rate of salary would be about a $65,000 PA salary at possibly a 15% commission. Now this is just to bring that experience that you would need to enter some of these new markets that you're interested in, as well as create that incentive so that you have that continual sales aspect. The second aspect would be the sales book. You said you recommended possibly incorporating two. If you can get one to do the work of two, that's even better. So for $35K per year would be an estimated cost for a sales booker. The second point on the sales would be the training. So right now your current sales for customer, your current sales department hasn't been there for a very long time, but they're not good at bringing in new business. That's something that was mentioned. But you know what they're really good at? Is customer relations. They've been there for over 10 years. They know all the customers. They have that repertoire with them. They're probably very comfortable with them. Why don't give them a little bit of training, teach them how to continue that customer relations, improve that customer relations, and then possibly benefit by selling to those current customers and increasing sales per customer.
There's a quote that we like to say at Minsphere, and it is that waste is the product of poor design. And we think that this quote is really applicable to one of your current situations right now, which is that of utilization. We know there's kind of maybe it's not up to be quite where you would like it to be. There might have been some. We think you can become more efficient and get more out of your staff. And that's really what this is about today too. We think it's more of a process of re-engineering to really make sure that you are getting all that you can out of your staff members as business owners to really make sure that you are capitalizing and getting all that you can get out. Again, we're really emphasizing that you should aim to increase your utilization, as Blair was saying, again, to make sure that you can be all you can be as a business.
So thank you, Petra. The first thing that came to mind with this low utilization was the sprinkler installations. It was about 50%. You estimate that it'll be up to 70%. Well, right off the bat, that could be mitigated with that extra sales personnel, bringing in more business, keeping these guys working. But on the next level, what if you were to integrate fire extinguisher sales and inspections into your service offering? Now, this is kind of why you wanted to purchase a partner with Shackleton, but we feel that you could do it. You could do it better, or you could do it as good, if not better. And so the first thing what we suggest is to integrate fire extinguisher sales and inspections with your inspectors, your current inspectors, and these would be the sprinkle inspectors, the sprinkle system inspectors, as well as the alarm inspectors. Now these people have about a 75% utilization currently. We feel that if you were to integrate this, create that bundling effect that Taylor was mentioning, you will be able to maybe have these guys working a little bit more on-site. They're not just doing one thing, but doing 3 or 4 things. So there's going to be some training and certification that will go along with that. We'll get into the costs in a moment. But most importantly, this avoids discriminating your current clients. You were suggesting that 20% of your you have a 20% break even with 40 clients that you're actually losing money on. And you were wondering, should we target those clients and price a little higher so that we can make that break even or make some money? Or do we just do it across the board? We suggest you don't. You're in a very price competitive market right now. Your competitors are really pushing that price on you. And we feel that this is not the best way to do it. Possibly the best way to do it is that bundling effect, that integrating and having more services. So when the inspector is on site, they're able to do 2 or 3 inspections instead of just 1. So that really creates that revenue per employee and customer.
So then the final recommendation we have for you obviously is to integrate the kitchen fire suppression system as well as your bundling offering. And that's just the bundle effect that we've gone on a long time ago. So right now, you were also, another key worry that you had was that what are your competitors going to do? What are your competitors going to say if you start entering their markets, if you start doing what they're doing, and how are they going to react? But do you want to just be reactive? Do you just want to react to what your competitors are going to do, or do you want to be proactive? You want to be proactive and realize that this is where the industry is going. That if you're not the one to do this, if you're not the one to integrate all these services into your offerings, someone else is going to do it. And guess what? That's going to be the deal breaker for your company. No more do for services anymore. You won't be able to offer your fire services. This is actually not only will this increase your bottom line, this will be what saves your company in the long run and will massively increase your bottom line, which I will get into in a second here.
So, what are some other options? We've been playing around with some bundling and some integrating, but what are some other opportunities? There's misplaced proof of inspection. This is something that you mentioned, that some customers, new customers, the high turnover restaurants, as the concepts are evolving, they're phoning you, trying to ascertain some of that proof of inspection just to smooth out the regulation. Why not utilize your customer relations, your new customer relations? Utilize these people who have the ability to find these records, but also to create those sales opportunities, to create new clients. What a wonderful opportunity to create new clients, especially when restaurants are turning over again and again. The second would be kitchen hood cleaning. When we were going over the financials, it seemed that in 2007, there was a really high profit on gross margin. It was approximately 67% or 68%. But as we come to 2011, we've noticed that decline, and now it's approximately around 36% gross margin. So there's definitely room for improvement. If it was able to improve it, if it was able to operate at that level before, there's good chances that you're able to bring it back to that level, if not better. So there's definitely some evaluation that needs to be taking place, but here's a great opportunity for improvement.
So marketing and advertising, this is something that we really feel is necessary for you to expand your business and to ultimately improve your bottom line. So currently, 80% of your sales are referrals. And it's kind of the way you guys are looking at advertising and marketing, why you should invest. But it's really a self-fulfilling prophecy, because if you don't advertise your market, of course, most of your business is going to be referrals. So what we are suggesting is that you start looking at going to these business functions, going where the restaurant owners are. If there's a group like the Chamber of Commerce, or being around them, kind of associate your company with restaurants, so that when people think restaurants and people are starting up a restaurant and they join these clubs, they're like, yeah, go to do for. They do everything and they do it well and they do it for a good price. So we're recommending you be there for them. So from the beginning, so you can see an increase in sales, not just on referrals, but you'll actually see that this small amount of money to join these clubs and to be active in the community will really benefit your bottom line in the end. So what is the bottom line? And I apologize, it's kind of tough to read the lighting, but the total sales, what we are projecting, is an increase from offering the new products and also offering new sprinkler systems. You'll see that our total sales will increase to about $3 million. Now, we've also calculated from a cost of sales perspective. We measured this at about 50% of total sales, as we took, your last was 54%, but you weren't getting as much bang for your buck. And you'll actually see from some of our suggestions, feedback loops with your employees to better be able to do their jobs, that your cost of sales will be lowered on about 50%, which is more in line with what your company was doing pre-2011. So that will give you a gross profit of $1.5 million. Now there is other expenses that will increase. We suggested hiring other people, suggested a modest increase in advertising. But if you look at it as well, your operating income will see a substantial increase from what it currently is. And I just highlighted also your interest payment. I didn't go into the taxes, but the interest payment is $140,000. $140,000 that's only increasing because you're only paying off the interest on the debt that you have. Now, this is something that has to be done right away. You're not dealing with your debt. If you're thinking about acquiring another company, if your debt is already $2 million and you're not a very large company, you're talking about debt to equity ratios. Your debt to equity ratios are out of line with industry averages. And to further expand on that, one worry we have is where your debt to equity ratio should be. You should look at the industry average, and that's where it should be. Right now, you're too high on the debt side, and that is highlighted the interest. But finally, the net income, and where this finally leads you, if you implement our solutions and our recommendations for you, you will see over 100% increase in your net income. And that's what really matters. That's why we're here. That's why we're doing this. And this is what the bottom line for you.
So we've thrown a lot at you. We've really talked to you a lot about what we really recommend to you today, but it's time to really look at how you can implement this. And we've given you a timeline to make this really clear about what exactly we're recommending. So, and we'll just start with the short term, and we're thinking between 0 to 6 months for implementation, what we recommended. So you'll see up here that the most important thing we have up here is to expand your sales. This can really be achieved by hiring a new sales associate. Again, as Blair was saying, at around $65,000, you go to 15% commission, as well as training your current sales staff for customer relations. We're budgeting a cost of about $4,000 here. But we think by doing these things, your sales will really expand, and you will really see a benefit to your bottom line. All right, so for the medium term, from 6 to 12 months, firstly, we see that we would like you to integrate fire extinguisher sales and inspections with your current inspections. Again, this is really important. Blair was talking about a lot about this, about really integrating your services, bundling them to make sure that you're getting the most bang for your buck, all that you can get out of them. Finally, cost of $5,000 for training professional and $1,000 for certification. Again, these are costs that we budgeted for you that we think you should be aware of, and really, but again, we think the benefits outweigh the costs. And finally, in the long term, in about a year plus, again, continue sales training. Like we said, this has been an important part of our presentation today. So again, we'd really like you to continue on with this. Secondly, possibly expand sales depending on growth and workload. Again, this will be up to your discretion once you've seen how things have progressed thus far. And finally, pay down debt at 50% profit. This is what Taylor was speaking to with about having a large amount of debt and making payments that weren't quite enough to get you out of the debt you have. So this is really what we recommend for implementation, and we think this will really help you in the long run.
One of the first risks when approaching this is, will the training and certification of these new inspectors be okay? Now, without a little bit more research into the industry, it's difficult to ascertain. But training typically comes around about $4,000 or $5,000 when you're hiring a training professional to certify. And we also estimated about $1,000 for the certification. These are just approximate values. But we feel that the risk of not getting that certification is fairly low. One of the things that you brought up to our attention was that you were afraid of losing some of the competitor referrals that you were having by approaching on their market. We feel that this may possibly be somewhat of a problem in the short term, but in the long term, increasing that sales, increasing the bundling effect, that will really offset a lot of those problems that you felt might be an issue when approaching this.
We don't want to talk too much about risks. It was kind of inherent through our whole presentation of how we're mitigating all the risks. In this economy, and with the current situation of your group, it's irresponsible as it is reckless to recommend expansion by acquiring another firm. It's definitely irresponsible. You'll probably hear a lot today about a solution that only is happening. We advise not to. In a time of a recession, companies in good financial standing take that expansion risk because it is at a lower cost usually to expand during a recession. But currently, with the amount of debt that you have, it is just simply irresponsible. Now, what we are suggesting is a way to be able to make yourself more lean, to be able to trim the fat of your company and get more out of your employees. What we are suggesting is bundling their services with the fire extinguishers, with the kitchen for professional fire. By doing that, you will be able to see the return on your investment, which is rather minimal, and you'll be able to see the return on your employees, really what we're trying to get, and get the most out of what Do4 is doing right now. We would like to be able to recommend expansion. We'd like to be able to say, go and kill the competition. Because you know what, that's what everyone wants to do. They want to kill the competition right away. But with these modest proposals, although they are modest, it is what is right for your company. And that's how we are mitigating the risk of your debt and of your economy.
So that concludes our presentation today. Thank you so much for coming this evening. It's been a pleasure to present to you. If you have any questions, we would love to take them at this time. Thank you.
You were showing us an income statement with $3 million in sales, that net profit of $225,000. 5,000. How long is it going to take, based on your recommendation, how long is it going to take us to get there?
We're looking at a 1-year timeline. Once you can integrate the fire extinguishers, once you can integrate all the training that Blair was talking about, that's about a 1-year timeline. So next year's sales forecast could be what we projected. So it's really quick.
And any projection on 5 years from now?
5 years from now, I think that's when you can start, once you start paying off that debt, once you're able to really make an impact there, then you can look at expansion, and then you can really get into some fun possibilities. So this is just a suggestion to kind of get you through the wall here, and in 5 years, each year strategy session that you have, you can reevaluate that.
Just on the productivity side, so I appreciate your comments on onboarding and improving the production for the sales force, also adding more resources. The question for me is, and it may be sort of towards the latter years of your recommendation, but the primary revenue generating part of our businesses in the area is low. How did you factor that into sort of your thoughts?
Yeah.
The immediate gain on one bill, but the market itself is low.
For sure. That is the truth. But two of the co-founders spend almost all their time trying to ascertain this new business, and we feel that it would probably be best suited if you had somebody else to help you with that, because that really is where a lot of your business stems from. And it's truly important to ascertain, even though it is difficult, low growth, but it's where a lot of your business stems from. So it is important to continue to dig at it. However, by bundling, by increasing your offering, then that's where you're going to start seeing a lot more of those returns. And that's where the growth will presumably come from.
I'm struggling to look at with your analogy at the beginning of our company to Walmart and cheap. And we've existed for 10 years. We're really relying ourselves on our installation, our service to our customers, our follow-up service. And can you not be a higher price business, perhaps raise prices, and still compete effectively with our?
I did not mean to insult you with your service or anything like that. I was really trying to get at the low prices and the bundling. I wasn't making a comment on your service, and we do believe that it's very important because of so much of your business is from retaining customers and the referrals. So it's obviously very important. But at the end of the day, it is a nuisance for owners. That's what your product is. It just provides a solution for the problem. So by low prices is really what they are looking for. So by bundling services, you can they're only not dealing with two companies anymore, they're dealing with just one company, and it's a lower price. So that's really what your consumers are looking for. That's what I was trying to get at, and I'm sorry.
I'm trying to, you were talking at one point about needing to increase gross margins. Right? So how do we can increase gross margins if we're not increasing our prices? Give me the plan on how we're going to increase our gross margins.
So the gross margins. Oh, the kitchen hood cleaning. That was merely, we're just looking at the one line item, kitchen hood cleaning, and it was just looking back historically. You had over 68% gross margin in that line item in 2007. Moving all the way to 2011, it's almost gone. It's about half that. So just historically speaking, we feel that there could be some room in the operation itself, whether or not if they're just not being as productive, if it's an employee thing, if it's maybe the client thing, we're not sure. There needs to be some research done into that. There wasn't a whole lot of information around it, but we do see an opportunity, and that's kind of what we were trying to point out, that there is an opportunity within your current organization.
So when you're on your new sales force or the salesperson, 15% commission, is that on the gross sale?
So this would be something that you would have to negotiate. It was just something we threw out there. We just thought it was kind of a ballpark figure of what would bring the sales. You're looking. It's just about attracting the right salesperson with the right experience. What kind of offering? It's really a human resource question. What kind of offering to incentive to bring them to your company? So if you find a lower one would be better, and it could be of net profit too. Like I'm not exactly sure what commissions are based off of, but it was just kind of around the ballpark figure.
I've been one that's been looking at this acquisition, and you're recommending strongly not to acquire it. Is a partnership
something that
Apologies to interrupt, that's the 5 minutes, so that concludes the question